Good morning, good evening, good afternoon, trader Steve here from Logic FX Trading, and welcome to the first public video that I've done for several months. Now, the reason for the absence, as many of you may know, I've been developing my Competent Trader training and mentoring program, and we had Christmas in the middle, and I had a bout of the cold in the chest that a lot of people over here in the UK had, and it's basically put me back by at least a month. I'm getting closer to it being ready to launch, guys, so any of you have been waiting for it, give me another week or two and we'll be up and running. Keep an eye on the Twitter account, and you can also follow on Facebook, and of course you can subscribe to this YouTube channel, and you can go to the website logicfxtrading.com or follow me on TradingView. Okay, so what is this video all about? Well, basically the whole time that I've been developing the program, of course I'm still trading for my syndicate, let's call it, and I've got that's my job, as it were, and all of this is extra. So of course I've been keeping an eye on the market and doing trading, not as much as I normally would do because I need the time for the development, but yes, I've been keeping an eye on the market. Now, the one thing that frustrates me really, completely frustrates me, is reading the news, the economic news, because every time something happens there's a big explanation for it in the news, and then you go and you look at the chart, and if you use Elliott wave theory, guys, if you read the charts, if you watch the charts, you can see what's going to happen. Now, you don't need the explanations. You don't need someone to tell you after it's happened why it happened. What you need to do is be able to predict that it's going to happen using Elliott wave theory. Now, I'm saying this for the guys who are maybe watching this that don't use Elliott wave and don't understand Elliott wave. The rest of you guys, of course, you understand what I'm saying. But I wanted to bring something up because if you go back, I don't know how long it was, 6 months ago or 8 months ago, when I produced a video about basically an overview of trading and how Elliott wave worked, and you can find that on the first page of the website, on the home page of the website, that's sitting there. Let me just show you that for anyone who just give me a wee moment here. Okay, guys, here, that's the first page of the website, and you'll find it there where we talk about everything that you need to know to be a successful trader. It's a big overview, guys. Okay, but it will set you up if you want to learn how to become a successful trader. For the rest of us, let's go back to where we were. We're on Bitcoin here, right? Now, what I did last year when we were producing that video, I wanted to show you how we can predict what's happening in the market, or what's going to happen, should I say, in the market. And at the time we used two charts. One was, okay, let's talk about this before we move. I just want to draw you something, guys. I want to draw that. Okay, because anyone who knows me or watches my videos will see that I always draw that impulse, correction, impulse. Okay, now I don't want to talk about that at the moment. We're talking about that. We're talking about the analysis part of it, and not the forecast. That would be a forecast because that hasn't happened yet, and we're not talking about that because I haven't analyzed it well enough to forecast that it's going to do that again just yet, and that's not what we're about. What we're about is all these people who are trying to explain, and I was watching television this morning, there was some expert on about cryptocurrency trying to explain why this had happened, etc, etc, and let me tell you why it happens. A chart is a mathematical representation of human nature. Okay, now I don't know if any of you, but when I was a kid growing up, I used to love to watch all these wildlife programs, David Attenborough and people like that, and they'd show you, a pile of wildebeest out in Africa there somewhere, and there'd be thousands of them or hundreds of them all standing in a big herd, munching away. But the ones on the edge, they were aware of what was going on around them. They'd sniff the air, they'd listen for things, they'd watch to see if anything's moving. And normally the wildlife program was showing you a pride of lions or hyenas or something trying to catch something to eat. And what the buffalo do is they all stand around eating away. The ones in the middle are completely oblivious to what's going on around them. But if any on the edge gets spooked, if they pick up a scent, if they see something moving, if they're aware of a lion being there, they start to run. And when they run, the rest of them run after them. 99% of that herd do not know why they're running. They're running because everyone else is running. All the other buffalo are running. Now, that's fine. If there was a pride of lions and they all ran away from it, that's smart. That's survival, guys. But what can happen is that they can get spooked for a branch will fall out of a tree, or a flock of birds will come down, or they smell a lion pride from 2 miles away because the wind changed direction. Those lions could be walking anywhere, guys. They could be walking in the opposite direction because they're not in the line of sight. They might not even know the buffalo are there because they're upwind of them. So they'll not pick up their scent. If the buffalo see that, they'll run. Even though there isn't actually a threat there, or they see the branch falling, or whatever it might be. They see a hardy beast or whatever it may be running out of the bush, and they go, oh, that's a sign, there's danger there, and they'll run. And the other 99% just follow, even though there isn't any danger. Human beings do exactly the same thing. You see it, we call it panic. And often you'll hear about disasters in stadiums or nightclubs or wherever it may be, where something's happened and everyone panics and they all run. And whenever the whole thing comes out about how many people died in one thing or another, or sometimes just injured, obviously, the vast majority of people either died or were injured because they were trampled or crushed to death by the panic, not by what the thing was that they were run away from. So we see it in human nature. We see it in human nature when they're giving out humanitarian aid, when people don't queue up orderly and take their bag of rice, whatever that they're handing out. They rush and it becomes a mob and it becomes a fight because of the fear that if you stand at the back of the queue in an orderly fashion, you'll not get any, because the people at the front, they'll run out before you get there. So everyone runs towards the trucks that are handing the stuff out, and it's a major problem, but it's human nature. That's the point I'm trying to make. Now, the markets are a reflection of human nature. Now what happens is, if you take this back and you go way back here, nobody was interested in Bitcoin. Obviously some people were, but the vast majority of people had no interest in Bitcoin. And if you took this back to a 1 hour time scale and start to zoom it up, there's still trading being done there, guys. There's still money being made. I guarantee you anyone that got onto that was really chuffed, or even that. But bring this back to the 1 week time scale. I think we're on the week, guys. Might be on the daily. 4 hours. Let's take it back to the daily time scale, guys. Okay, there's all those peaks and troughs. There's what they look like in the daily time scale. And then it does this. And the people who have been in it, and traders like ourselves, you get to know about this. And, maybe you have a look at it. Maybe you're like me and you go, well, I don't know a lot about this. I'll stay away from it, but I'll watch it. Other people will jump in because they're taking a gamble. A punt, let's call it, rather than a gamble. There's a difference between what I would call a punt and a gamble. A punt's just taking a small amount of your capital and saying, this thing could go really big here. I'll risk this amount, knowing full well that I could lose it. It's a bit of a punt. So it comes up and it comes up, and then it starts to do this. Now, are we on the daily time scale? Okay, I put a chart out here. Now, as I say, if we take that out of the equation and you look at this coming up, and I think there's another one I put in there. And basically I was saying this has come up so much that it's going to correct, guys. And then it come up some more, and I said, be careful of this. because we've got an A, a B, the chances are we're going to get a C. This has come up too high, too much. That's in normal trading, guys, which is also the reason why I never got involved in this. And then it goes ahead and it does this. Climbs Mount Everest. Right up to there, back down. The reason that it did this was because the herd started to run in the direction of the rice bags. Everyone started to charge in. People who knew absolutely nothing about trading, people who didn't invest, people who weren't investors. Guys, I was down the pub. I go to the pub in centre Belfast here to watch football on the weekend and really enjoy it, have a good time out. People were starting to talk to me about Bitcoin. Not because they knew that I was a trader, because I don't talk about what I do. I go down and I sit with the guys and none of us talk about work. We just enjoy the football and talk about football and get a break from our jobs. And people were starting to talk to me about Bitcoin. I was hearing conversations everywhere about Bitcoin. People who had no interest in trading, people who knew nothing about trading, were all of a sudden explaining to me how Bitcoin worked. And I was letting them talk away. And I was saying, well, to be honest, I don't know that much about it. And that's the truth. I don't know that much about Bitcoin. I know more than they do, but I'm not an expert in it. That's the point I'm making. So, that's what was called back in the 1920s. There was a guy called, just that herd mentality, that's what pushed this up. Everybody and anybody jumping in. And guess what? Anyone that get in up here somewhere, or up here somewhere, or even here somewhere, going long, they've lost, particularly if they're not traders, they've lost an awful lot of money, guys. There'll be people who will have borrowed money to put into this, and they'll have bought it up there somewhere. And they won't have had a stop loss. And it will come down and down and down and down. And they're now praying that it's going to go back up again. And we've talked at length about that in the Competent Trader. So that is pushed by herd mentality, not by any fundamental, not by any demand by the international trading community to buy Bitcoin to pay for gold or goods that are transported from one country to the other, or to pay for services. This is pushed up by traders. Before I talk about a guy called Joseph Kennedy, no, I will talk about Joseph Kennedy now. Here's Joseph Kennedy. I hope that's not covered in. Let's just shrink this down a wee bit and move it across for you guys. This guy's called Joseph P. Kennedy Sr. He was the father of JFK. I'm sure you've all heard of him, the American president who was assassinated back in the 60s. This was his father. And he was a financier. He was an investor. And he was probably the equivalent of today's George Soros or Warren Buffett, that type of character. In 1929, the Wall Street crash. You've all heard of the Wall Street crash. When the Wall Street crashed, this guy didn't get caught up in it. And obviously after the people interviewed him, they say, well, how come you didn't get caught up in the Wall Street crash? How come you sold up so much of your stock before it happened? He supposedly said that he knew it was time to get out of the market when he received stock tips from a shoeshine boy. Right. The point he's making, whether he did or he didn't, the point that he's making is that whenever people who know nothing about the stock market or know nothing about gold or silver or Bitcoin, when they know nothing about it and they're investing in it and they're telling you a story about, oh, I have this friend who put $2,000 into Bitcoin, now he's worth 50,000. Stories like that make people invest. I'm going to go out tomorrow, and they put it on their credit card, or they take their savings and they put it in, or they get money from somewhere and they buy whatever the commodity is that we're talking about, or the instrument. That's why Bitcoin went up, guys. Why did it come back down again? Because all the guys that got in early, all the guys that get in down here, decided, I've made $50,000. I'm getting out. And then all the new guys who were getting in here are going, oh, this is going long again. And they keep buying it up. And some of the other guys who didn't get out there are going, hey, or some of the guys who bought in here said, hey, you know, thank God I got my money back. I'm getting out. And they all get out. And then people say, oh, it's come too low, we'll get in. But the sentiment's the same and it comes down. Now I'll show you this. You guys who know me, they'll know what I'm going to show you next. Silver. Look. That's exactly the same as we saw with Bitcoin, only over a longer period of time. And then it climbs up, has a little correction, and then it climbs back up to where it was, and then it took off. Somewhere around here, everybody, every trader, every person in the pubs, whatever, said silver's gone up, silver's gone up, silver's gone up, let's buy it, let's buy it. The big banks, everyone piling into silver. And then it got to a certain level, $48 or thereabouts. Maybe it was $50. Yeah, hit $50 and people said, that's enough, let's take our money. And they took their money. Some of these guys bought back in again, came back up. They said to themselves, hold on a wee minute. You know, we've just got back break even, let's sell. And it comes down, it comes down, it comes down. Bump, 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 bump. Same pattern. We can see it again. US dollar, Jappy. Yet again, if that's on the week, isn't it? And we looked at this before. Oops, sorry about that. We looked at this one before. And remember, this is on the weekly now, guys. If I couldn't put Bitcoin on the weekly or it would have disappeared. Would have been too small. Wouldn't have enough information. Yet again, this is over 20 years, guys, or thereabouts. We have our big move up. And then down it comes. And when it gets down around the bottom, and it doesn't necessarily have to come down, we measure this using fibs, but when it gets right back down again, people see value in it, and then they start to buy it up again. And if we zoom in on this, I don't want to start doing an analysis, but if we go into, say, the 4 hours on this, I just want to give you one little hint on this of what's been happening. So since the start of 2017, basically what it's done is it's put in a zigzag. Looks like we have a flat 3 connector. This is a complex correction, guys. And now we've got an A, B, and we're getting a C, which will probably come down and break that. Now how far down it goes we don't know, guys, but I imagine it's going to come down and break that, and then it's going to turn and it's going to start going up again. Now if we take that, then remember this is US dollar Jappy, and we go to the dollar index, which we have done an awful lot of analysis on. If you go back to when was it, September, October time, we were getting this and we analysed this and we said this is a wave 4 of a 5 wave coming down, and we were waiting for our 5th wave. There's our 5th wave, guys. Right, that 5th wave, is an A wave correction, because this is the end of a 5 wave impulse. Now if you don't understand elite wave theory, you'll not know what I'm talking about, but you guys that do understand it will know that this is 5 waves. And what do we know about the 5 wave A wave is that it's not finished, so we should get some sort of ABC in a positive direction or a long direction. It might come deeper, it might just come to there, it might just be a short, but we'll get an ABC, and then we'll get a repeat of that. It might not be as long as that, it'll not look exactly like it, but we'll get a 1, 2, 3, 4, 5, and it might be deeper than that. It'll come down there, and then the dollar will start going up again. Now, if we go back to our US dollar Jappy, and we look at what's happening there, guys, what did I say there? I said that basically this was an A, B, C, and C would break there, which means that the dollar's going to get weaker from here, which is what we've also been saying. So the dollar gets weaker, it'll come down to there somewhere, and then as the dollar gets stronger, it'll go back up again. Okay guys, that'll do for this. I just wanted to have a say on that Bitcoin and where it's gone and what it's done, and explain to you. And the news, guys, ignore the news. Unless it's let me just show you one other thing about the news while we're here. We're back on Logic FX trading here, guys. And this I haven't updated this recently, but I will be updating it once I'm back training you guys. If you go here, this is economic information that's about to be released. That sort of news, you can look at it before you open a trade and determine whether there's anything that may influence the direction or the strength of movement of whatever it is that you're going to open a trade on. That's a different thing to listening to the mumbo jumbo that people come out with explaining why something's happened. Guys, people who release news are in a business, and the business is it's clickbait. That's what we call it nowadays. In the old days, it was about advertising revenue. And if you can make something as sensational as you possibly can and still get people to come and watch it, the more people come and listen to it, the more revenue you make from your advertising. You've got to remember that when you're listening to news of any sort. It's all about making advertising revenue, guys. Whether it's on the only news channel that I know of that isn't influenced by advertising revenue directly is the BBC, because they are funded by the British public through the government, through taxation, through license fees. So they're not influenced by advertisement, but they're not great for financial news. Everyone else is influenced by selling advertising on their news, whether it's a website or whether it's CNN or whatever it may be. It's all to do with advertising revenue, guys. And the more people they get watching them, the more people they get listening to them, the more money they make. So they have a tendency to sensationalize things and make it out that they know something that they don't necessarily know. Their job is talking about the news, not trading on a day-to-day basis, guys. Alright guys, just one final thing, one final comment I want to make before we finish up here. This makes me so mad. And I'm not one that normally gives off about anyone else. That's not. I like to focus on my own work. But when people start to either criticize my work or without any justification, that's what I'm saying. You know, if I've said something wrong, certainly say, hey Steve, you sure about that or whatever. I'm an open guy. If I'm wrong about something, if I've made a mistake, I'll certainly come back and say, hey guys, you're right, thanks for pointing that out. But when people start to hijack your work to promote their own mumbo jumbo, it really irritates me. And I'm pointing this out. I know that most of you guys are smart enough and long enough in the game to understand the difference between genuine people who are trying to help you and the idiots who are just out there trying to make money out of people who don't want to, people who are, you know, I'm not saying naive, that's not the right word for it. People who haven't been in the game long enough, and they're, you know, they want to get in and they want to take $1,000 and turn it into $20,000 or $30,000 overnight. We all know that doesn't work with trading, but there are still people out there making out that that's what you can do, and they're everywhere. Now, here's one of my videos. This is on my Facebook. I posted this on Facebook so that people could learn about Elliott wave theory for nothing. And I spent weeks doing this basic Elliott wave theory series, and I put it out for nothing. I'm not asking for anything for it. I'm not charging anyone for it. I'm putting it out there for two reasons. One is to help people, and the second one is for them to see that my work, my style, and down the line they might then say, hey Steve, I like the way you're teaching, will you can you show me something else? And for that, then the more complex stuff, obviously I'll charge a fee for my time, and that's how the business world runs. But this guy comes along, stock market astrology. Now, there isn't one shred of evidence in the whole of scientific history, nothing, that says astrology works. Now, I'm not talking about astronomy, guys. That's the science of looking at the stars and the universe and trying to figure out what's going on out there and maybe where we all came from, or where we sit in the universe anyway. That's astronomy. This is astrology. This is nonsense. It's looking at the alignment of the planets and the alignment of the stars and saying that you can predict the stock market with that. And that's okay. If they want to do that, that's fine. But don't use my work, which is easier. This, meaning my work, or astrology. Guys, do you see, if you think you could make money by not putting the work in, if you think you can make money by not working hard, I'm a very smart guy, lads. If I thought that you could make money through astrology, I'd be the first person to climb on the bandwagon. If I thought you could make money through trading by not working hard, I'd be a multi-millionaire. And I assure you I'm not. I've been a millionaire, but I'm not a multi-millionaire. And I'm not even a millionaire at the moment. This is Mumbo Jumbo, but he's using my work, which predicted the crash today. Now, this was done the 30th of January. I'm not even gonna go into his web. I was nearly going to show you it, guys. Stay clear of stuff like this. And I know most of you are smart enough not to go near it. But what is he talking about? The stock market. So let's go back to TradingView and we'll have a look at, I assume he's talking about the SP 500 or something like that. So let's go and look at the SP 500. Right, number one, where's the crash? It's made a correction. Number two, you can see that it's going to make a correction by having a trend line in. And it may even come down to meet this trend line. It might do something like this, guys. And then it may go longer, or it might break out. But we analyse it using our standards, using the things we know, and we analyse it day after day after day. We don't use the stars to predict that it's going to do it, and then come back and say, hey, look, man, it did what I said it's going to do. It's obvious it's going to do that. Because anything goes up that fast is going to correct. And it could go on up, but it's going to correct, and it might correct some more, but we analyse it. Right, so, anyway, sorry about the rant. I just want to try and warn you about this stuff. And, you know, if they leave me alone, I'll leave them alone. But when they start hijacking my work that I spent hours and hours and hours and years and years and years to get right, it's out of order. Anyway, see you in the next video, guys. See you on the Competent Trader. Bye for now.